Hi, this is Tony Sagami for Uncommon Wisdom Daily, and I'm coming to you from Phnom Penh, Cambodia. I'm in Cambodia because this is where the 20th annual ASEAN Economic Summit is being held. This conference is attended by the top leaders of all the countries in Southeast Asia, as well as the Chinese President Hu Jintao. And when it comes to finding great investment opportunities, nothing beats talking to the people that actually lead their countries. But let me get to this week's commentary. Until last year, ExxonMobil was the largest company in the world in terms of market capitalization. But then Apple knocked us off its perch. And now, ExxonMobil is not even the largest energy company in the world. It's been dethroned by a Chinese giant you may never have heard of called Petro China. Now, Petro China boosted its oil production by 3.3% last year to more than 2.4 million barrels a day, while Exxon's production dropped by 5% to 2.3 million barrels a day. Petro China has already spent $7 billion more since 2010 to buy oil reserves in Iraq, Australia, Africa, Qatar, and Canada, and it plans to expand even faster in the future, so its lead over ExxonMobil is even going to get bigger. Plus, Petro China has several other advantages over ExxonMobil. Number one, it has lower labor costs and certainly lower regulatory and environmental costs. And to top it off, it's 86% owned by the Chinese government, so it has the inside track on the lucrative drilling permits in the country. As an American investor, it's just as cheap and just as easy to buy shares of Petro China as it is to buy ExxonMobil because it trades here on the New York Stock Exchange under the symbol PTR. And by the way, it also pays a 3.2% dividend. But Petro China is far from the only foreign energy company giving ExxonMobil a run for its money. China National Offshore Oil Corporation, also known as CNOOC, is the second largest energy company in China, and it reported record profits just 3 weeks ago. CNOOC focuses more on natural gas, so it also benefits by the new push by the Chinese government to reduce greenhouse gases. CNOOC also trades on the New York Stock Exchange and pays a 2.7% dividend. Also keep an eye on China Petroleum and Chemical Corporation, also known as Sinopec. It's China's largest oil refiner. It's also traded on the New York Stock Exchange, and it pays a 2.5% dividend. Finally, I want to mention Brazil's Petrobras. It's in the middle of a massive $225 billion investment plan that should boost its output to about 4 million barrels per day by 2015. And yes, it too is traded on the NYSE under the ticker PBR. Now, I'm not recommending you rush out and buy any of these energy stocks tomorrow morning. As always, timing is everything, so I recommend that you wait for my buy signal in Asia Stock Alert. But if you're looking for companies that are likely to dominate the industry in the years to come, you need to look beyond the borders of the United States. I'm Tony Sagami for Uncommon Wisdom Daily. Thanks for watching.